Welcome to Talking Healthcare, your go-to podcast series for all things healthcare and healthcare-related investment. I am Shehzad Jamal, partner strategy and consulting for Knight Frank Middle East. I'm joined with my colleague Stephen Flanagan, who heads the real estate valuation practice within the Knight Frank network, and we're going to be talking about healthcare real estate valuations. Hello, Steve, and let's get talking. Steve, we've been working together for about close to five or 6 years, and you've also seen the healthcare practice grow within Knight Frank, and we've done a lot of work together as well. Keeping in view the overall market and how things have moved, why are we seeing a lot of traction in the healthcare space, not only here in the UAE but also in Saudi Arabia?
I think generally, if you look at what investors are looking for in this current investment environment, there's a lot of interest in beds and sheds, whether you talk to our UK offices, our Europe offices, or otherwise. Beds, healthcare, hospitals would fall within that. Beds, sheds, logistics is another popular asset class. We're focusing here on healthcare. Why is it getting lots of traction? Well, I think if we look at just at Saudi Arabia alone, your healthcare team have done recent reports. I think there's in the next 4 years there's about $16 million of capex. $16 billion of capex going into about 70 new outpatient 70 new hospitals. So it's a lot of development. It's a lot of new pipeline in that healthcare sector. So, that's why there's a lot of interest in it.
Absolutely. And I think, when we were looking at the healthcare demand going forward, we were seeing that, we need about 44,000 beds in Saudi Arabia alone by 2035. And keeping in view the Vision 2030, there's a lot of emphasis on certain sectors and also within the PPP space. If we look at Riyadh, for example, there's close to about 8,000 beds required, and Jeddah is about 6,000 beds. Within the sector, and if we try to segment the market as well, we can see that there's demand for long-term care, mental health, rehabilitation. It's maternity and childcare. It's the works. Plus, we have these medical cities coming up in Saudi Arabia, which has really made the sector very interesting going forward. And in terms of segmentation, we are seeing demands in all segments. For example, the premium segment, the mid-market as well, and which is why we feel that the demand is growing, and with the let's say the D33 plan for the UAE, when they're looking at growing the population to about 5.6 million in Riyadh, they're talking about growing actually doubling the population, if I'm not wrong. So all this would require a lot of infrastructure in terms of healthcare to meet the needs of the population. But when we say okay, but from a real estate investor perspective, or from a bank's perspective that is looking to take exposure in the infra rather than the operations of healthcare, how do you see this stack up with the other sectors?
I think a big part of the capex of any healthcare operation is the actual physical real estate itself. Absolutely. It's expensive. It's bespoke. It takes a long time to build and to procure and to develop. So, in terms of those returns, generally healthcare is considered a specialised asset. So if we were to segment assets, healthcare you would put in as perhaps in a bucket of assets, like perhaps with hotels and education. They're a little bit specialised. They've not been a popular asset class, let's say.
But we also need to keep in mind that these are not very correlated to the economy. People will fall ill. Like hospitality would be impacted by, for example, if there's a recession, people might not travel as much. But healthcare or education per se, they're quite stable. If you're ill, you will go to the hospital, right? So which makes it actually a defensive asset, but probably something that people should consider. But what about yields? How do you see that stack up?
Well, traditionally, we didn't really see many transactions in this space. Hospitals, clinics were not an attractive or a much traded asset class by traditional investors in this region. But in more recent times, we've seen entities such as some of the REITs in Saudi Arabia buying hospitals, typically with a lease in place to an operating company. And those leases tend to be quite long in length. You can talk, 15 to 25 years. So it's once these assets are stabilized, it's a very stable, secure, and not really a volatile cash flow. So investors like them. The kind of range we've seen in terms of cap rates, if you like, probably in the 7 to 8% range for something very good, considered prime, if you like.
When you say prime, you're talking about commercial office?
Yeah. Well, when I say prime, I mean best in class healthcare, if you like. If you compare that to some of the other real estate asset classes, in Saudi Arabia, we'd probably see prime offices trading in the low 7s to the high 7s. Retail real estate, probably again for something very prime, in the low to mid 7s. Industrial and logistics, again, those yields have come in based off high rental growth and a big shortage of supply. So there's some comparisons there with other types of asset class, but I think the long-term nature of the leases that are in place makes it, as you say, it's a defensive, stable, long-term cash flow, which people are starting to like.
Yeah, I can imagine, and we can see that. This asset class has done quite well in at least Europe and developing markets. Because of their sticky and long lease terms. But over the past, why have you seen people coming in and knocking at the door for valuations for the healthcare asset class category?
Well, yeah, I think there's a number of reasons. Like you say, we touched on that the real estate is a very sort of capital-intensive part of a healthcare operation. If there's $16 billion of identified new pipeline of healthcare assets to be built in Saudi alone, notwithstanding the rest of the GCC, which we cover, you're going to have a lot of banks financing the healthcare sector. You're going to have probably some funds being structured to bring these to develop or to hold these assets, private equity investment, and potentially, yes, existing hospitals where people perhaps want to get the asset off the balance sheet and have a sort of a propco-opco structure. So the why we're seeing a need for this service, well, as I say, yeah, loan security, IPO, recording on the balance sheets, fair value, M&A deals. We've seen that in this sector. So yeah, a wide variation of needs, if you like, but they need that independence as a starting point for any loan being underwritten or otherwise. So big demand for the services.
Definitely, and but then we will also have to look at it from two different angles as well, right? From a risk perspective, one could be from the property, and the other could be from the tenant. Because each of them would be carrying their own risks. I mean, what do you think, from your experience, are the top 2 or top 3 risks that people are looking at from both these angles?
I think from the property perspective, it's the nature of a hospital. It's very bespoke. So you've got a risk that if the operations don't work, the facility doesn't make money, what else could you do with that building? Is there an alternative use? If you have an office building, you could perhaps convert it into residential potentially. Hospitals are a little bit more bespoke. So there's that risk of what else do you do with it if things don't go well. Technical and physical obsolescence as healthcare trends shift. Will the building be future-proofed? And then I think from the sort of the tenant or that sort of opco perspective, is the rent that they could afford to pay, or will they be able to generate enough revenue out of the facilities to pay a rent to a landlord? Will that tenant be a good covenant? Will it have a good credit worthiness? Will the operations still be needed Are they offering the right services that the market wants? So those kind of things, and those all contribute towards the risk of the cash flows generated from these sort of assets.
You're so right. From our experience in this sector, when we are doing valuations with your team, we see that, yes, I mean, you're looking at it from a purely real estate perspective, but, members from our team, from the healthcare team, are looking at it from, two separate angles. One is exactly like you talked about, I mean, is the healthcare asset or the services provided, are they actually relevant? And now, with how this urban regeneration is going through, and how areas and demographics are changing, we also need to see whether these services are actually aligned with the population over there, whether the price points are aligned, whether the insurance coverage is also aligned, because all these things actually have make a lot of difference, and whether they have a hub and spoke model aligned with it or they don't. All these sort of things actually have to be looked at from a healthcare perspective, and whether all their services are being utilized through the optimal utilization as well. And then, of course, from the financial aspect, we've got like CFAs and chartered accountants on the team who are also then going through the numbers to understand, whether the income that they are showing is let's just say reasonable in terms of how from a forward-looking perspective they're looking at, from trying to edge out all non-recurring items and everything to look at what an EBITDA should be looking like, and then arriving at what affordable rent is really for that asset. And when we are looking at valuing these assets, we need to arrive at what the asset can actually pay, what is really affordable without being onerous on the business. And that theoretical line is actually then present value to arrive at the value of the asset. Because I don't know from your perspective, but I feel that there are more nuances between healthcare asset versus a residential or commercial asset, because two hospitals adjacent to each other can be drastically different in terms of services, offerings, business models, and all these sort of things. And one could be prime, one could be not prime, and actually their income potential could be technically different. The amount of capex spent on that asset could be significantly different, which would make the value of each asset different, and would be more bent on their earning potential. Whilst in real estate, if there are two apartment buildings next to each other or apartments next to each other, you could say that one went for 10, the other one can go for 10 plus minus condition, etc. So there's more reliance on what the market has to say. Am I safe in saying that?
Absolutely, which is why when we look at these types of assets, it's key to have as you say, a sector specialist. That's why our valuation team work with the healthcare team, a sector specialist, a doctor who can look at the business plan, look at the projections. Are those reasonable? Will that facility be able to generate a certain amount of revenue, and are the costs reasonable? And then again, your team has got some great financial analysts that can make sense of all that, and what's a reasonable, stabilized level of operations, EBITDA. It's not a straightforward. It's not just other commercial real estate assets. We might capitalize a net operating income to get to that stabilized EBITDA is a lot more tricky, and you need that proper input to understand the business.
Yeah, absolutely. It does become a bit challenging at times when you're looking at different markets, and also justifying the valuation, especially because there's a lot of time bias. It could be that somebody could have just valued it based on brick and mortar, and now we're trying to look at it from a more market perspective. If we look at it from a valuation risk perspective, right, and if we are to summarize what is, how do we assure like fair valuation of a healthcare asset? How would you close it? Or how would you just summarize it for us?
Well, I think we touched briefly on this affordable rent method, and we get asked that question a lot by the property owners, the banks. How would you classify an affordable rent? So I think the risks of valuing these assets is that rent that's put in place between the propco and the opco, or the landlord and the operator, is that fair? Can the business sustain, the levels of business from the property sustain that rent and still give a margin or not? If it can't, then the creditworthiness of that tenant, that ability to pay the rent is damaged. It impacts the property value. So I think affordable rent is the key thing, and making sure that that's set at a reasonable level is quite key to these properties and the value.
To summarize, there is demand for healthcare. We are seeing that the sector is growing both in the Middle East, when I say Middle East, as in UAE as well as KSA. There's sufficient amount of investment coming through. There's a lot of infra investment that is coming through in both these regions because of the population growth. Healthcare requirements are changing and evolving, which is making the sector more exciting. When we're looking at healthcare valuations, it shouldn't be considered as a brick-and-mortar valuation, but more focus should be given on the income potential of the asset and what EBITDA and what profitability we can generate. And of course, on the back of that, we arrive at the value of the asset.
Correct. Absolutely. I think that's key. It's there's no comparable properties. These are all very unique, very bespoke. And it's often quite a sophisticated investor that would look at these. So I think it's having an acute understanding of the business that's operated from the facility, so that it's not the business is not burdened by the rent, and that it is an affordable rent, as we talked about. So I think that's quite key. Otherwise, although there's long leases in place, that income may not be secure if it's really over rented or under rented.
Thank you very much, Steve, for this insightful conversation. There you have it, ladies and gentlemen. That was Steve Flanagan for you, our partner for the real estate valuation division of Knight Frank in the Middle East. We touched upon the importance of real estate valuation within the healthcare space. We also touched upon the future and the prospect that the sector has in terms of future demand, and the various reasons why you would need a valuation to be undertaken, and what is the right approach and methodology to undertake such valuations. So until next time, look forward to seeing you in the next episode of Talking Healthcare. Thank you.